Welcome to TradeTheNBI.com. This is John. This report is for the 20th of February, and post-holiday, very minor movement. Nothing really special happening. Everything's pretty much chugging along. Stayed above that 2762 level that we had from, way back. And despite the little weakness that developed with we have cyan under red, so it's still very bullish. The steel crossing below cyan, at the same time orange moving above green. Tends to be a little bit soft weakness. The fact that we're zero line the red at zero line DOC means that we're pretty much in that neutral kind of phase, and it's just consolidating the moves that have taken place. We also had lowering of the Morganacci highs up here, which usually draw price too. So now that they've reached it, we could be looking for a more conclusive moment, particularly if we see a change in what's going on with our shakeout readings here on the gold continuing to rise, meaning that the extended trend move is still there. So as soon as that starts to flatten out, of course, once it flattens out and everything, you're already going to see beginnings of price moving lower, and you can see that this meeting between DOC green and cyan is going to give us a much clearer breakdown clue. The thing is that you've already got a reset of the steel, meaning short-term buyers have already reset at the lower level, so it doesn't look like this is going to be much of any down move in the near term. Just already seeing the same thing here for the NASDAQ. So despite the fact that it's a little bit weaker, you already have a DOC spread in the form of the cyan moving, but you'd already had the attempted green orange cross that kind of met. Didn't really do a whole lot. We're still at the same zero level, and likewise a much stronger gold rising on the shakeout there. So again, going to be limited to, you always hear these prognostications about how the entire global economy has, fallen apart. We've been hearing this for how many years now, and it really hasn't played out very well for the gloom and doom crowd, but we've been talking about that for quite some time. The spike of the euro definitely helping the market on the recovery back. How long that will last? We've got a little bit of a lower dip on the higher extremes. That was enough to give it a little bit of a push. Maybe gets to the 114 range if it's lucky. This is the explosion of gold. This is that anticipation trade of what is expected to happen, which is inflation. Of course, we've been talking about inflation for how many years now that they've been expecting it. Now that we've had this unwind of the Fed being, actively participating in keeping rates artificially low and keeping economic activity limited, the full reign now is going to have an impact, particularly as we're seeing significant wage hikes, which is something we've been looking for quite some time. They had not materialized for many years, but now we're actually seeing the effect of them, and that is what the preemptive gold trade is that recognition that it's going to have a downwind effect over time. And obviously, they like to trade ahead of time. Speaking of trading ahead of time, here we go. We had that nice little dip coming into the post era. We had some soft reads. We had the dip below here, but it was still kind of, pretty weak. It wasn't horrible, but you had declining magenta and everything else. By the time it turned around the second one, you finally got the spread between the shakeout yellow and magenta well over a couple points. That was enough to signal, and then of course it turned to a gold at that particular point. A little bit of your 50% retrace on that first move, and of course all it did was reset the shakeout, which began to start the next leg up, and boom, all the red dots start appearing, and that gave very clear reset value right here to the lows of 27.75 general target range. And sure enough, with shorts being a little bit squeezed right there, made a punch at new high, but again, more of the same red dots, and this is what they love to do. Market close and then come back and hit every one of the positive extremes right there, satisfying all of it, which is exactly what they did. So, perfect run. Beautiful case of exactly what we look for. We can go and look at the various short configurations that started with the initial crossover right here. This was the first initial assignment you had red all the way up at plus 7.5. Not very sustainable, but the problem with any setup there is you knew that even if you got it, you were going to end up with this steal coming back, and sure enough, you get the DOC spread, and immediately the steal is already starting to climb, like from the beginning of it. You had like 1-2 bars here, then boom, steal is climbing more, confirms with the crossover. At the same time, it's crossing orange, which equivalently is back pretty close to where that originally short. This is again where one of those where you'd have to be towards the high to be making your short case there. Now, the second time it happens, similar situation, but much bigger spread between where the crossover is and what happens with red to the steal. It takes much longer. Doesn't happen until you're all the way over here after the move is, pretty much dipped quite a ways. All you have left is that little extra target, which you're definitely going to take just a fraction above. Hits that, and then sure enough resets, creates a little short cover pop right there, but now they're just kind of digesting. Where do we go from here? And right now, it's looking like we're setting up for a new little turnaround move. So that's the basics of it, though. It's pretty straightforward. If you want, I can mark where those DOC spreads took place on here. This one happens much later at the end of the move, but the short snake that originally crossed, where everything crosses all at the same time, is right back above there. Again, one of those where I'm not even interested until I'm up near the highs. Even if you got in before it was really ugly, this one with the big up bar would have produced the green going back up, but not been very exciting from that standpoint. The other earlier short snake takes place right here at the crossovers of the two. That is up at the 86.25 range. Pretty decent because you're at the highs at that point. It then makes a small deviation to the new peak, 87.50, so it's a 1.5 points of heat, but your expectation all the way down to 87 is 10 points. So that's how I usually risk to reward those kinds of setups. As always, though, if there's something unique or significant, I will certainly put it up. As always, though, trade well. We'll talk again later.